So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today, I want to talk about some proof as to why the government doesn't want you to retire. And this may be a little bit of a touchy subject, so I wanted to broach this subject with hopefully a little bit of different insight and different thought process. I've always thought about this in the back of my mind. And, when I started out in this business, I was actually working in New York. So I had an employee-sponsored plan through Deutsche Bank when I worked in New York. And I always thought to myself, why couldn't I contribute more to my retirement accounts? Why were these limits in place? All these things that you just actually, kind of learn as you start getting into the workforce, right? And so many people don't realize that these things are in place until they actually start generating money and have a salary or an income. But regardless, I think it's an interesting conversation that we need to have and something that I always think about in the back of my mind. So the first thing that you have to understand is that, and this is honestly, I don't understand why this is in place. And we'll talk about maybe what the reasoning is and the rationale is, but then I'll give you guys my insight and my opinion on this. But as you guys know, there are contribution limits to how much you can contribute for retirement. And this is why I say that the government really doesn't want you to retire. They want you to put money away for retirement, but by no means do they want you to actually retire or put a lot of money away. If they did, there'd be no contribution limits at all. It would just be unlimited, like save as much money. If you're a saver, save as much money as you want. Put it back into the system, invest, right? Save your money. That's what they say they want you to do. But I don't think that that's actually the case, because what we see is we see a lot of contribution limits. So right now, the contribution limits are for 401ks is $18,000 or $24,000 if you're over 50. And then you can also deposit $5,500 into a Roth or traditional IRA. And again, the IRS, if you're over 50, they allow you to do an extra $1,000. Woohoo! So you can catch up with an extra $1,000. But this is mind-boggling to me that these are the contribution limits that you see. And these are on the broad plans that most people have. Why on earth would the government restrict the ability for somebody who has had a good year or maybe a couple good years to save as much money as humanly possible? In my opinion, if you're going to save the money and you're going to put it into a 401k or an IRA, you know that it's going for retirement. You know that you're not going to be able to touch it until you're almost 60 years old. So why wouldn't they let you put as much money in? Well, a lot of the reading that I've done on this suggests that it's because they're trying to level the playing field and they don't want to have this unfair advantage to people who are wealthy or rich as having an IRA or a retirement account as a tax haven or tax shelter. I completely disagree with that. I think that for anybody who's a regular person working a job, busting their butt every single day, you want to save as much money as humanly possible to even have the opportunity to be classified as rich or wealthy in the future. And I think the reality is that they cut people off early in the cycle. They cut your legs off as you're trying to really get started here, because they say, look, you can be, sufficient and you can save for retirement, but just don't save too much, right? Like, here, save, $5,500, but don't save anything more than that. And so what happens with the extra money? Well, you end up in most cases either spending the extra money or it goes into a taxable account, which means it's just that much harder to generate substantial income off of it, because now you have to fight not only the markets and all the fees, which you have to fight anyway, but now you got to fight taxes on top of that on an ongoing basis every single year. So it becomes very difficult, I think, for people to get to that point of retiring. And we know this is true because these plans have been in place for how many years now, and still most people over the age of 50 don't have too much money to their name. In fact, I think some of the most recent stats suggested that most people over the age of 50 have maybe less than $30,000 in net worth, right? And that's the vast majority of Americans, which is really sad. So I think these plans need to be overhauled. I think that it's not working the way that it is right now. I don't think that they want you to get to that level. I think they want more people contributing and working and paying taxes on an ongoing basis. And I think they have no incentive, honestly, to get you to retirement. So again, that's my opinion on this. Take it for what you will. I'd love to hear your opinion on this as well. So send me a tweet, shoot me a message on Facebook. Let me know. In either case, thanks for listening today and happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.